Hey everyone, welcome to the Smart Economy Podcast, a production of neonewstoday.com. I'm your host, Dylan Grabowski. In this episode of the Smart Economy Podcast, we were joined by Jacob Phillips, the co-founder of Lombard, a non-custodial Bitcoin liquid staking service provider. In this conversation, we discussed what sparked the recent building in Bitcoin renaissance that took place in 2023 and 2024, how Bitcoin's market capitalization is the perfect solution for DeFi's need for liquidity, the differences in the mentality of deploying Bitcoin as an asset into DeFi versus deploying other assets like Ethereum, building on top of the Babylon staking protocol, upcoming Lombard releases, and so much more. Just a reminder, nothing said on this podcast is a solicitation to buy or sell any tokens, and that the guest or host may hold tokens discussed in any given episode. You can check out a full disclaimer over at www.neonewstoday.com. Also, if you enjoyed this episode, please rate and review it on your favorite podcasting platform and share it with your friends and family. Every rating, review, like, and comment helps us reach more people and bring you more of your favorite guests. With all that said, I really enjoyed speaking with Jacob, and I hope you enjoy the conversation too. Hey everyone, welcome to the Smart Economy Podcast. Today we're joined by Jacob Phillips, the co-founder of Lombard, a liquid Bitcoin staking protocol. How are we doing today, Jacob?
Doing great. Thanks a ton for having me on.
Yeah, I'm really excited. You have a fantastic background. We were talking about that before.
Yeah, I didn't realize it was this good. Originally, I was going to do this from my room, but I switched it up because of the lighting, and this turned out all right.
Nice. So before we kind of jump into what's your background, who are you, what's Lombard, I kind of want to jump into the deep end with kind of a broader question. And I'm really happy to have this conversation with you because I just can't wait to hear more about how we're increasing the opportunities for DeFi and Bitcoin. So maybe from your perspective, why did you want to start building at Lombard? What was holding Bitcoin back from truly participating in the DeFi landscape since DeFi became a thing during the food token summer of 2020?
Yeah, this is a good question. So just super quick background. Most of my DeFi experience started in food coin summer, right? Bitcoin or DeFi summer 2020. I was at Polychain at the time. We were investing in the coolest new stuff being built on chain. There was always this idea that Bitcoin was going to be involved in it. People didn't really know how. We were still building on rootstock and different sort of side chains at that time. Invested in a protocol at Polychain called Badger DAO, which was sort of the first ETH native attempt to bring Bitcoin into the blue chip DeFi protocols that existed. Didn't really work out. Bitcoin, WBTC had a little bit of a heyday, but then it, kind of sputtered a little bit. Never really grew to the amount that people thought it would. Fast forward, a whole cycle later, maybe a cycle and a half later, depending on how you count it. And this is beginning of this year. And you started to see Bitcoin DeFi, get a new source of momentum. And it's actually interesting kind of talking about this in retrospect with some other Bitcoin DeFi founders. My sort of leading thesis on it is that, historically, it's been really easy to get yield on Bitcoin through BlockFi and, centralized lenders and whatnot. Only after the collapse of those was there this market need for some new form of economy for Bitcoin, right? And so this is where Bitcoin DeFi kind of found its place, came in and filled the niche. And I mean, huge win for DeFi, and I think perfect timing. And I think what's been really cool was, I had been spending a lot of time in the ETH ecosystem. It's funny, right before this, we were having this discussion about how, I think both of us are sort of falling in love with Bitcoin and everything that, the ecosystem stood for. And a lot of the reason that I sort of at one point was spending almost all of my time in the ETH ecosystem and, alt L1 DeFi ecosystems was because that's where the innovation was happening. That's where the cool stuff was happening. It's, Bitcoin was kind of just not doing anything. There was, and attempts to bring Bitcoin into these ecosystems were sort of failing. But I think the coolest thing that happened at the beginning of the year was you started to see a fundamental shift in the Bitcoin community. For the first time ever, you saw core devs adopt, supporting further expressivity at the Bitcoin base layer. That's super cool. You see some of the biggest Bitcoin maxis in the space turn and now get excited about Bitcoin DeFi, launch venture funds focused on investing in this. And you saw, momentum in the space that looked very early DeFi summer 2020-esque, call it January through March when Uniswap and Aave started ripping. I mean, at this point, it's like you put the three of those together and it kind of feels like we're at the point of no return for Bitcoin DeFi. And sure enough, there was a fourth catalyst, the introduction of a protocol like Babylon that for the first time in it ever enabled native Bitcoin staking that I think takes this to the next level. Sort of an exogenous catalyst to ignite the ecosystem. Something that was missing when WBTC had its first run around in DeFi summer, but is present now to sort of proliferate all of these Bitcoin wrappers and Bitcoin liquid staking tokens throughout DeFi. So it was sort of the perfect storm, I think, to make what was always an obvious thesis finally come true.
So like, what was it then that kicked all this off this year? Because it seems like nobody was excited about building on Bitcoin. And then like Casey Rodimer's protocol comes out and we can start trading like shitcoins on top of Bitcoin. And then Runes pops off. And I feel like that was kind of like the genesis for bringing back in the excitement into building on Bitcoin. But like you mentioned Rootstock, these guys have been building since 2016. You mentioned all these OGs and these maxis. They've been here forever. Like,
for sure.
It wasn't even BlockFi or Celsius and getting yield on lending your Bitcoin that got everybody excited. I can't even say that it was like BitVM that really did it. So like from your perspective, what was like the thing that kicked off all the interest and finally amalgamated all these like different areas that allowed us to build and really kind of like sparked the interest this year?
Yeah, it's a great question. The only thing I can come up with is that it's a snowball effect, right? A combination of a number of things. It wasn't just the tech. It wasn't just, a culture shift in the Bitcoin community. It wasn't just users now with no place to earn their, earn money on their Bitcoin. It was the combination of all of those, I think, kind of at the same time. And, it's actually interesting. You could do this for so many crypto phenomena where you, or rather, cycles or whatever, where you look back and it's like, why did DeFi summer kick off at the beginning of 2020? And there's never something specific you can pinpoint. But what I will say is people had been building tech in the Bitcoin community for Bitcoin DeFi for quite some time, having, varying degrees of traction. And, as much as I was sort of giving Rootstock a little bit of a hard time there for, having built unsuccessfully for quite some time, to be completely honest, the model that they put forth from a technical perspective was not that crazy different from what you see today in some of the leading protocols. It's just a difference of one of them got to critical mass, or it looks like some of these protocols are going to get to critical mass and others didn't. So the big difference between this time around and the couple times before when Bitcoin DeFi has tried to build is now there's finally users. Why are there users? I mean, I think it's because now there's a yield source on Bitcoin that people are excited about. And, you really couldn't have Bitcoin DeFi in the state that it, is today without, I think, maturity of existing DeFi ecosystems plus, call it sophistication and bridging protocols to the point where, this is actually something that we can build. In 2021, when people were first sort of like getting excited about Bitcoin DeFi and trying to bring it into the DeFi ecosystem, I think those things just weren't quite in place yet. DeFi was still really very niche at that point in time, away from the kind of outside of the interest of big Bitcoin holders. Certainly the smart contracts were not mature enough yet to the point where you could reliably deploy. And then, bridging was still sort of a work in progress, so to speak, outside of like centralized wrappers. But, and maybe the one other thing is like, this is what I keep harping on when we discuss like why is now the right time. I think that, we've had a lot of momentum already, but I think, maybe I'm a little bit biased because Lombard's building this Bitcoin liquid staking token built on Babylon. But another way to think about this is like, look at what happened in the eigenlayer ecosystem, where everybody had known ETH liquid staking tokens, restaking tokens, LP tokens as collateral. We'd been talking about these things since like 2018 or 2019. Like Dan Elitzer has this post on superfluid collateral that I think was in like 2019. And, it took until basically 2023, 2024 for this to come to fruition. And the question is like, why did that happen? Well, for the longest time, people had built, protocols upon naked ETH, and this was just fine. There was never enough of the catalyst for users and protocols to sort of take on extra risk and do extra integrations to get an asset that was going to not really move the needle for users. Now, this like LST or these LRTs are earning all kinds of points and tokens on top of that, which makes it this, super boosted collateral effectively relative to the naked ETH. So now there's this incentive for people. Now it's like, using an LST or LRT in a protocol is materially better than using naked ETH. The same thing I think is happening in the Bitcoin community, where now having your Bitcoin in your cold wallet is materially worse than doing something simple like staking it on chain because of, the potential for Babylon yield and the Babylon point system they have going on. Similarly, then using a liquid staking token in DeFi is materially better. We've created these new incentive systems that I think are driving the whole flywheel here.
And just really quickly, the majority of our audience is pretty tuned in. They're pretty crypto native, but I always try to hope that my mom listens to this and maybe she picks something new up. So can you just Eli 5 real quick what an LST is and what an LRT is?
Exactly. Yes. Sure thing. So there's this concept of staking within proof of stake systems that basically says I am going to be one of the judges of the protocol. I will put up some stake. If I act dishonestly, not according to the protocol, you can slash my stake. And to do that, for putting up that stake and participating in the protocol, I will then earn some reward. So then, DeFi maxis came around and they said, hey, it's such a shame that all of our stake is going to be locked up in the core protocol. Now there's no liquidity for the DeFi ecosystem. So what if we created a receipt token, basically you can go stake your collateral, get a liquid representation of that collateral that you can then go take without DeFi. So it basically says hey, a liquid staking token is a token that is a liquid representation of that staked asset. It says, hey, there's some assets staked that are locked up. There's some properties, that define this asset. I can then use this collateral within any sort of permissionless protocol as if it were the underlying collateral. And obviously, in theory, this liquid staking token is a little bit of a different asset class than the sort of naked ETH or naked BTC. But, because of the sort of perceived risk by the market of slashing or of a lack of liquidity created by the staking protocol, the two actually trade basically hand in hand. And now I'd actually argue that STETH and ETH are basically interchangeable in the ETH ecosystem, to a degree. So then the next step up is okay, imagine you have staked ETH or Bitcoin. You now have a liquid staking token that you use without DeFi that's representative of that staked ETH or Bitcoin. And now what if you could rehypothecate, or rather stake that collateral again to do something else? So in the first step of staking, you're securing the core protocol, ETH, or in this case, Babylon is kind of base layer Bitcoin staking. Then a step up from that is okay, what if I could restake that collateral to now do something else, to secure some other chain or provide some other insurance? In this case, those protocols are all taking on the risk. They know that there is risk of that underlying collateral being slashed, but they say that's an acceptable risk. I'm okay taking that. It's fully transparent. I can see exactly what validators you're delegating to. So I'll take on that risk, and then I'll allow you to use this asset as collateral to, do something else within the ecosystem. So it's kind of just, liquid staking tokens are one layer of staking, restaking tokens are two layers of staking.
Awesome. That's a heck of an intro into the pod.
Yes.
Fantastic responses. Let's just take 2 steps back so that we can paint some more context for some folks can understand a little bit about you. Maybe we can start with when was the first time you heard about Bitcoin, or maybe even Ethereum? And did it click for you right away, or did it take a little bit of time for you to have an aha moment?
It definitely took me a little bit of time. So I heard about Bitcoin back in high school. A buddy of mine would joke about it on the way to school, and I went around telling everybody you should be buying Bitcoin. But at that time, it was hyper volatile. I mean, it was just like a get rich quick scheme. And I think I was just, I was trying to be a little bit provocative, I'd say, because I never actually bought any. That was kind of the thing. At that point, it was oh man, am I going to spend all my Christmas money trying to buy a Bitcoin that's going to go to zero in a little bit? In retrospect, it was obviously silly that I didn't take a leap into it, mostly because I would have been cool to have just been involved in the ecosystem. You get some skin in the game, and I think I would have been paying attention to it so much closer. So then step 2 is I go to college my freshman year. Roommate is an ICO investor and thinks he just understands the market. When an ICO pumps, that was because of his intelligence. I'm just God, you're driving me nuts. I'm trying to become a stock analyst at this point. I'm learning to do DCFs, and he's sitting here talking about ICOs. I'm get out of here. This is all vaporware. And only until my junior or senior year, I'd already done a couple internships in banking, had already gone down the whole traditional finance route, and now like had all this free time on my hands that I started researching crypto originally only because I knew VCs wanted to hear it, kind of like I knew it was cool. I knew there was something going on. I sort of just researched enough to be able to make a good pitch. But then funny enough, good old Cleveland, Ohio, where I went to school, was launching like a crypto initiative. Well, they called it Blockland. This was their attempt. It was sort of this, it was run by this guy, Bernie Moreno, who actually just got elected senator, which is pretty cool. Yeah. So, that sort of in conjunction with that movement, there was a small startup accelerator there that traditionally was investing in like SaaS companies, which was what I just wanted to get into traditional VC. So I was like, interviewing there. I pitched a crypto company. They were like, hey, that's cool. We'll hire you. Came in whatever the first day was. And they're like, hey, by the way, we didn't tell you this, but we're launching a blockchain fund and you're going to work on that. And I'm like, God damn it. And so, but long story short, they forced me to research it a little bit and I got hooked from there. And, the rest was history. What better place to be, diving into? If I was in traditional finance, I'd probably still be, working for 3 or 4, 5 different layers of people, something like that. And crypto, I mean, I think I went from like not knowing anything about crypto then to working at one of the best funds in the space in like 11 or 12 months. So pretty cool opportunity for sure.
Yeah, that's awesome. And shout out to Bernie Moreno. He unsat an incumbent, largely with the help of PACs like, I forget the name of the current PAC, but also with help from folks like Stand With Crypto. I got to go out to DC in December to chat with Colorado legislators about pro-crypto legislation.
Nice.
And it feels like we won this election, regardless if you're left or right. It feels like crypto won this election. So that's really cool that your genesis kind of has some early roots with a forthcoming pro-crypto senator.
Yeah.
So like, this is really cool. You go to school, you want to go into the traditional institutional realm or investment realm. I myself 2 years ago went on a university tour and got to speak with different blockchain clubs around the US. And I was going to be amazed if any of the students I spoke with still graduated, as opposed to dropping out and working on the projects that they're working on. So maybe you can share a little bit about your time at Polychain and how you went from kind of being on the VC analysis side into kind of migrating into product building. And maybe this is a little bit of your experience when you went to Perennial Labs, or maybe you can just kind of talk about how the idea for Lombard kind of was something that you couldn't stop thinking about.
Yeah, for sure. So I guess here's the basic story is when I knew I wanted to, so it's like late 2018, I know I want to go all in on crypto. And the only way I could think that would be, reasonable for me to get into the space would be to just learn everything I possibly could. And I figured the best way to do that would be to work at a VC fund where you get to kind of see everything cool that's happening. And so I went and worked at like a VC fund that wasn't investing in very interesting stuff. And then I leveled myself up to one that was investing in interesting stuff. And then ultimately I like used those 2 experiences to like step up to the Polychain, of course. And, the biggest thing there was like, I just had to get started somewhere. The thing about VC is if you want to be, the best funds see the best deals. It's kind of like whatever fund you're working at, you see the deals they're seeing. So if you're not working at a good fund, you're not seeing the best stuff. You're not seeing the coolest things. You're not like training your mind to think a certain way. It's like all of VC is a kind of a game of pattern matching of like, what does a good team, good founder, good protocol look like? And if you're seeing the wrong stuff, you're going to train your brain the wrong way. So anyway, I ended up, getting into Polychain, and man, that was a pretty crazy time. That was like, this is like, I started early 2020. So late 2019, Bitcoin starts ripping. The next bull market is just, on the cusp. DeFi starts ripping. And I was there with, what were, it was a group of like 8 or 9 of the smartest crypto researchers in the space. Just a crazy environment to be learning in. We were in office for 3 months before COVID hit, which was like an incredible place to start. And then from there, we had like a really tight-knit team. And it was cool. Polychain, when I first came in there, it was like every deal we were doing, we were spending 2 weeks researching on it. Everybody on the team was reading the white paper. We were like debating this back and forth on multiple like hour-long calls. Those were the glory days. Like that was the perfect learning environment. I'm almost a little bit, I don't know, like I wonder what it would be like if I was restarting that process now, because the pace of deals, like there's so much more capital, the pace of deals, the cost of deals, the amount of diligence people do, I think has changed quite significantly from where it was back then. And honestly, I think that was kind of why I ended up, leaving way down the road was it just, we went from being really, really great researchers then to, about to invest in NFT exchanges on Terra and, with 24 hours to decide. It was just a very different ball game. Bull market crypto investing is very different than bear market. But anyway, I think the other thing I thought was I had originally thought that investors were the smartest people in the space. And I do still think that there are a lot of really, really intelligent ones. And I've had the privilege of working with or working alongside a lot of them. But I also think, those guys see a lot of things and their job is to kind of be the big thinker, the visionary. At the end of the day, the smartest guys in the space are the guys making the highest conviction bets. It's not just I'm going to invest in infrastructure because crypto is going to go up. It's I'm going to invest in some application within some ecosystem that does this, and I'm going to invest all of my time and energy into it and all my financial capital. It's literally, no one goes all into a bet harder than a founder or a builder. So I knew I wanted to do something DeFi, and it just so happened that there was a great group of guys who were really good friends of Polychain who were launching kind of a DeFi studio. Ended up joining them, Perennial Labs. This was my first foray into building effectively at Fence funds. Everybody likes to sit around and think we think about these protocols so often. We think about token launches, how to build DAOs, how to take certain things to market. We know what it takes to make a good project, but turns out actually doing that is a whole hell of a lot harder. So even, I remember my first 3 to 6 months there, it was like drinking from a fire hose, making a ton of mistakes, but learning from them. It was a great experience. You kind of just have to go do it. And that's why, to some degree, I'm always a little bit skeptical, I think, of VCs who went to the building world, because I know it takes them a little bit to ramp up. At VCs, you only really do high value work. There's a legal guy and an ops guy and someone to do all the paperwork and stuff. You kind of just have to think. And at a startup, it's you are all of those guys. So I hope you're ready. I spent 2 years building a Perps protocol on Arbitrum. Perps is one of the most exciting and one of the most competitive spaces. I worked with a really great group there. It was cool to just watch the whole ecosystem grow. But, at some point, a lot of things came together all at once really quickly. And it was sort of, Lombard became an opportunity I couldn't pass up on. It was maybe the best market opportunity I'd seen come in my way. It was an area that we had a really distinct competitive advantage in that, VCs are kind of like ecosystem builders to a degree. I kind of knew what projects would be great in the ecosystem. I was good at just sort of pitching DeFi broadly. As where with Perennial, I think we were focusing very narrowly on a subset of users in DeFi. Lombard's kind of core mission is just to onboard people to on-chain finance generally. So it's my first goal is to pitch you the most primitive form of DeFi, which is just taking your Bitcoin out of your cold wallet and staking it. And then from there, I'm sort of upselling you into all the amazing things that, the smartest people in crypto have built within the decentralized finance world in these different ecosystems. So it's been a great change of pace. And maybe the last thing is, I've sort of been working with some of my old Polychain colleagues on this. So it's been an opportunity to work with, some of my best friends in the space. So hard to pass up.
Yeah. So we're kind of, we're the parachute's launched, we're kind of landing to the ground and we're about to start digging into Lombard and what you're working on. Yeah. But you and I share kind of a similar trajectory where we went YOLO crypto as a career in late 2018. I remember it was the absolute bottom of the bear market when I pulled the ripcord on my previous career in October 2018 and went full-time into crypto. My friends, my family, myself, I didn't know what I was doing. And I thought that it was kind of insane that I was making the leap then. But in bear markets is when we build and is really when we kind of amalgamate and test what we're made of. Right. So I'm kind of curious to hear how you landed on Bitcoin as the network to be building on, because Bitcoin's the OG. It survives multiple bull bear cycles. But like we were saying earlier at the beginning of this conversation, even before we hit record, there was kind of an initial love and then it faded away. So maybe from your perspective, without talking about why building on Bitcoin is so great, maybe we can just from a high level perspective, share from your insights why Bitcoin is the network that is destined to succeed, whether there is broad scale support from the state or not? Like, what makes Bitcoin the thing that is worth building on today?
The reason I originally got into Bitcoin or crypto in the first place was because it was it seemed like it was already past the point of no return in 2018. When I was looking at this in I can't remember when it was exactly, like 2014, 2015 or something like that. And then again in, freshman year of college or whatever. At that point, there was still so much uncertainty. It's like Bitcoin in the early days to an outsider who wasn't like fully in on the fundamental thesis looks like a bit of a meme coin, However, it's like if the meme catches on, it becomes this like incredible, public good that no one could recreate, right? Like Bitcoin at the end of the day was sort of this magical thing that happened. It could only have happened in sort of the way it did. If somebody tried to recreate this, it just wouldn't work the same. And so, even when I was first getting into crypto, it was sort of already said and done a little bit, Like I thought Bitcoin had already kind of locked in, or not so much that it was said and done, more like it was past the point of no return. All the big VCs were already investing in it. All the big banks were already doing trials with it. All the, everybody in Silicon Valley was playing around with it to some degree. And it's one of those things where it was like, Bitcoin is a little bit of a meme. Like the thesis and the ideals had already caught on to the point where it's hard to imagine anything stopping it. Even if there was like a technical malfunction or somewhere it broke down, people would just restart it at this point. Bitcoin's not a thing or a technology. It's like an idea. And so I think, that's just insanely powerful. And so now fast forward many years later, it's like crazy to see each cycle, everything that evolves. At that point, it was like, the 2017, 18 cycle was cool just to see that people were doing little trials with it, nothing material. Now in this cycle, it's like BlackRock is like launching stuff in Ethereum. It's hard to even fathom how far we've come. Yeah. And now politicians are talking about putting on the nation's balance sheet. Like these are just, these are wild things. Yeah. And yeah, maybe just to tie this in real quickly to Lombard. The real story of how I sort of got back to Bitcoin was I spent a lot of time looking at what I perceived to be the cool stuff. When you're at a VC, you're always thinking about what's next, not what was, because you can't make any money off of what was. You always have to look forward. And now it's like a little bit different. Now it's all about solving user problems. And I think one of the most actionable problems in the crypto space right now, for better or for worse, is the need for more liquidity in DeFi. So it's like there's this asset that is, twice as big as the rest of the market or something like that, right? It's like a couple $1 trillion in market cap that's entirely left out of the ecosystem. If you could bridge this over to the DeFi ecosystems we built, imagine how much new liquidity you could bring, protocols and chains and applications. This is the missing opportunity that I think people are just now starting to capture. And I think this was the big difference. I've like invested in a lot of protocols at Polychain, and had the opportunity to kind of build on a couple when I was at Equilibria, the studio building Perennial. But all along, I think only so many of them are solving like a really, really actionable need. Something that's like such a pain point that people will adopt this here and now rather than kind of letting it flutter or whatever. I think there's like a lot of incremental innovation that just don't move things forward. The need for new liquidity is something that is pressing to the life of every protocol and new chain, app chain, whatever that people are building. So I think it's resonated quite nicely. It takes me a very short amount of time to explain why Lombard is interesting to people, as where past things I think have taken a lot longer.
So I think for like crypto natives such as ourselves and maybe the majority of our audience, it's really easy to understand why somebody would want to stake Bitcoin and be able to receive a yield on it. But if you go back to a conversation that Saylor and Safety to Moose had maybe about 2 months ago, Saylor caught a lot of flack for saying that you can earn yield on your Bitcoin by loaning it or lending it out to banks. So what's like the bridge that's missing, or the gap or the divide between the kind of like Web 2 traditional folks like Saylor who are trying to say that there are ways to earn yield, along with like the maxis who will never let go of their Bitcoin? How does Lombard kind of like serve as a perfect kind of bridge between those two and really open up a world of opportunities for traditional and for crypto native alike?
Long story short, I think Saylor will come around. It is true. You can always earn yield on anything if you're willing to take on some risk. The difference is those risks are just a little bit different. The risk Saylor is describing is like, I trust someone, I trust some institution. Those are things that people are traditionally comfortable with. It feels good to know that there's, some big bank with a big brand name that probably doesn't screw me over. But then you end up with money and BlockFi and FTX and something like this. I was saying this on a panel at DEF CON, like, it seems like for better, with time, centralized institutions will always let you down in some way, So imagine trying to do that same form of financial activity that, Saylor was talking about, loaning to a bank or some market maker or some institution. What if instead of having to, it's like there's some inherent trust that is built upon, a legal contract and, maybe some brand recognition or something like that. The fact that we now have technology to replace all of that with code and math is undeniably better than anything that the financial system's built on right now. And I think, it's a little bit scary to trust. I think people aren't used to trusting on-chain code and mathematics, but once they come around to it, it's like, it's going to be silly that we ever just trusted people with our money in the way that we did. So, DeFi is bringing forth these sort of foundational trust primitives that we've never had before that I think are just totally going to change the game. So it's kind of the same thing. I mean, there's ways to earn yield on your Bitcoin. You take on some risk. I don't necessarily even think that like those are a bad thing. One of the coolest parts about the Bitcoin DeFi space, I think, is that Bitcoin DeFi exposes the whole spectrum of trust and risk. So LBTC, I hope that LBTC is lent on centralized institutions and DeFi platforms and everywhere in between, because it's like users who need to be able to have the optionality to make this. I think over time, users are going to gradually, they're going to gravitate to battle-tested protocols like Uniswap and Aave because these are just fundamentally better venues for doing the type of financial activity that they're trying to do relative to these centralized institutions. But, there's value in each of those for different types of market participants. So I don't think it's necessarily either, it's not one or the other. It's some combination of both.
So maybe this is a good segue into giving your elevator pitch for what Lombard is, and then also maybe talking about how as a non-custodial solution, LBTC works with other protocols. I'd also love to hear you delve into Babylon a little bit and share how that empowers the work that you're doing at Lombard and how it also kind of serves as a layer for LBTC.
Sure. Perfect. So Lombard is a Bitcoin liquid staking protocol. We're the largest Bitcoin liquid staking protocol. In fact, last night we just hit $1 billion in TVL, which is pretty exciting. The way Lombard works is users deposit Bitcoin, native Bitcoin, into the Lombard protocol. The Lombard protocol stakes it into Babylon directly on Bitcoin L1, and then waits a couple confirmations. You can kind of think of Lombard a little bit as this bridge that allows you to then mint LBTC, a liquid representation of that staked Bitcoin, on any of a number of networks. Right now, just ETH mainnet. In about 2 or 3 weeks, you'll be able to do this across a number of chains. And so LBTC is representative of this Bitcoin staked in Babylon. So what does that mean? Babylon started off as this time stamping protocol based on this sort of this time locking protocol from, I can't remember the name of it off the top of my head, but there was like some foundation for this technology back in 2016 or 2017 that they then basically realized that if you, using very sort of simple logic within Bitcoin script, you could create a protocol that makes it such that a user, in this case, a finality provider, can sign updates to blocks, basically saying like, hey, I saw this block on a chain, it is now final. And if I signed with the same signature updates that said 2 different blocks at the same block height were final, then you could slash me. And if you think about this, this is exactly what a slashing protocol is basically doing if I was building this at the protocol layer. You're basically saying like, hey, if you double sign, if you do something malicious that's not in accordance with the protocol, in this case, Babylon sort of isolates this one very narrow but very, very important form of risk within these protocols, you can then get slashed. So it's kind of the first time you've ever been able to do this directly directly on Bitcoin. People build mechanisms on top that rely on multisigs and stuff. With Babylon, you can do this directly from your self-custody wallet. It's pretty wild tech, and I think it was exactly what was needed to create enough momentum within the Bitcoin community. I mean, Babylon's had 16 blocks worth of time worth of a window where you could deposit into their protocol. And I think they have like, a couple $1 billion in TVL now. They're just about to open Cap 3 here soon. So it's pretty cool. And I think, the magic of this is like, okay, now users can stake their Bitcoin. This is like step one of a user's journey into on-chain finance. My step zero is like, I have Bitcoin. It sits in my, it sits in my cold wallet. It doesn't do anything. This is where most of the Bitcoin is. Step one is like, just do something with it. Find like the lowest risk, lowest yield form of it, and just kind of test this stuff out. Once you've got your Bitcoin out of the cold wallet into some form of on-chain finance, the upsell from, hey, you're staking to Babylon to, hey, there's a fundamentally better way to stake called liquid staking. And oh, by the way, here's a protocol that's like Uniswap or Aave that's had like a $10 billion bounty on it for 3 or 4 years if anybody could hack it. That hasn't been hacked. I mean, this is like arguably safer than some banks at this point, So to be able to like stack yield on top of that, I think is just the start of this. So, I mean, Lombard launched, I think early or late August. I'm losing my time horizons now, but we launched with some big blue chip partners, Pendle, Morpho, Gearbox, have been working really closely with the EtherFi folks. There's a protocol called Veda that does automated vault management that has been awesome. And, we've expanded to a number of other places since then. And, now looking to go cross-chain soon. I guess the real pitch for Lombard is anything you can do with your Bitcoin, you can do it better with LBTC. And Lombard fundamentally is about onboarding net new users to on-chain finance. So we sort of think of it as a little bit as like a layer between DeFi protocols and some of the biggest, holders of any type of capital, but of crypto in the world.
So that's phenomenal. I think the hunger for getting yield on your Bitcoin is there. Block size Celsius, like people were willing to give up, Bitcoin users were willing to give up their custody to a third party in order to get like 6 to 8%. So clearly there was some demand there. But I'm wondering, and maybe this is kind of like a chicken or the egg question. Are you noticing that people are hungry for yield and they're just willing to go anywhere, be it custodial or non-custodial, or maybe it's an and/or? Are you noticing that because there was this issue with Bit Global and Justin Sun and procuring the custodial solution for wrapped Bitcoin, WBTC, is it a combination of either of these things that is kind of like lending credence to Lombard being able to get $1 billion in TVL? Or is it just kind of like a natural market shift?
This is a great question. And very similar to another question I get quite frequently, which is, hey, Bitcoin is still this big group of Bitcoin maxis. They don't want anything to do with DeFi or Ethereum or any of these other ecosystems. And the honest truth is like, Bitcoin community is so big that there are different pockets of people who are comfortable with different things. But what I will say is every single conversation we have with any Bitcoin holder of material size, regardless of the type, starts at security. People think about Bitcoin differently than they think about their ETH. My ETH, I have no problem deploying to ETH DeFi protocols. My Bitcoin is kind of something different. It's like your savings account versus your checking. I'll swipe my debit card all day or whatever, but the second you have to dip into savings, it gets a little bit scary. Now, I think over time, this is going to change. There's no real reason why you should view your Bitcoin differently than you should view your ETH or some other asset. Maybe some Bitcoin holders will disagree with me, but at the end of the day, it's an asset. You can put it to work if you want. Assuming that the risks are the same, I think you should view that opportunity a little bit similar. One of the coolest parts about Bitcoin DeFi, to me, having spent a lot of time in the ETH ecosystem, is in ETH DeFi, there is a shared security primitive that is smart contracts. Every protocol is pretty much built the same way. The only nuance, I guess, is like there's a little bit of trust assumptions around, is the smart contract upgradable or is there some multi-sig watching over it? But let's set that aside for now. In Bitcoin, you expose the full spectrum of trust assumptions because there are no smart contracts. There's no sort of like one foundational security primitive that everybody builds upon. Everybody has to recreate their own from scratch. So there's this whole meme around, Bitcoin L2s. There's like 1 million of them. In fact, just about everything built on Bitcoin is effectively a Bitcoin L2 in a sense that it has its own form of security primitives. Lombard is building a Cosmos SDK chain that'll be out here in a couple weeks. Comet BFT designed to allow us to scale a validator set up to the point where Lombard as a primitive can be sufficiently decentralized until there is some form of, true expressivity within the Bitcoin base layer. And back to kind of the original question of like, I guess, how comfortable are Bitcoin holders with, relinquishing some degree of control? It's a tough conversation, but I think it's something people can get around. This is part of the reason I think I started with, there has to be enough of a catalyst to get people excited. At the end of the day, users are taking on some degree of risk. They're going to ask to be compensated for that in some form. So if there is no yield to be had, then it's just not really worth my time to even, take on this risk. However, if there is enough yield, then it, starts to be something you can get comfortable around. This is like exactly what I think happened with Eigenlayer. A lot of people had ETH sitting on the sidelines, not doing anything. Then it all went into LSTs and LRTs the second there was enough of an incentive. So, what I will say about Bitcoin DeFi also is like going back to that idea of we now have exposed the full trust spectrum. I think part of the challenge with Bitcoin DeFi is that I said that as a positive, and it's both a positive and a negative, depending on what kind of builders you get in the ecosystem. You get people building pretty ridiculous protocols, zero transparency on how the Bitcoin's secured, or worse, it's like they're not telling you, and it's a 2 or 3 multi-sig. Like you get the full spectrum in good and bad ways. And I think Lombard's goal from the start has been to come out here and be this security first, blue chip-esque primitive, where we are setting the standard for what security looks like in the Bitcoin space. The ETH ecosystem has spent 5 years figuring out how this stuff has worked. When you do something bad in the ETH ecosystem, like actually, this is a great example. Coinbase launches CBBTC as a new primitive within. I can't remember if they launched it first on Base or Ethereum mainnet. Either way, when they do that, they launched it without proof of reserves, and the community, there was a huge uproar. Everyone was like, "Are you serious? Who would do this in their right minds?" And you might have seen that the Bitcoin DeFi community was pretty damn quiet while that was happening, and I'll tell you why. Lombard as a Bitcoin LST right now, there are 7 or 8. We're the only ones with a proof of reserves live, and we've had it since day one. This is absurd. It's like either you don't want to prove your reserves or you can't prove it, or you're just taking security like it's, security and transparency like it's a joke. These groups would get eaten alive in the ETH DeFi ecosystem. So it's one of those things where it's like there's a lot of maturity that has to happen and is happening throughout this cycle, I think, of Bitcoin DeFi that, in future cycles, we won't have to worry about. I think Bitcoin DeFi is relearning all of the lessons that DeFi had to learn over the past few years.
I feel like Bitcoin just has this monumental hurdle to overcome because we were told, and the vision that we bought into is that this is digital gold. It is the thing that will survive against inflation. This will last longer than the dollar. And so the mindset going into Bitcoin is I'm accumulating as much as I can, and it's my life raft. It's what's going to save me when the dollar collapses. So it feels like there's a big tidal shift of information that we have to go against before people can kind of understand a little bit better about how, yes, they can hodl onto this asset, but they can also deploy it on these other networks. And there's also still a little bit of, shitcoin is still a term. There's still a lot of people that are negative towards the ICOs, towards tokenization, towards DeFi. And it's just, it was antithesis of what Bitcoin was as a narrative. So it feels like that's still kind of like a hill that a lot of Bitcoin hodlers need to overcome when they can view Lombard as something that can enhance what they already have. Something that I thought was curious that I would love to hear a little bit more about. You mentioned that you're building your own BFT chain. So what's going to be the purpose of this? Is it going to be for composability? Is it going to be for third parties to kind of like build on top of so they can create their own security assumptions on top of what you've already built? I'd love to just hear a little bit more.
Definitely. And I'll tie this into a thing you were just saying, which is like, there is so much, you make a good point. There's so much gravity behind this asset. It's like the answer, this is my Bitcoin is like what I hold on to in case the world collapses. The idea of trying to gamble for a couple percent yield, giving away control of that would be kind of crazy. Like it's just sort of not worth it. So either the yield has to be super high or you have to create the right trust assumptions. What's interesting about Bitcoin is if you think back to like what I was saying about the ETH ecosystem, there's this shared primitive that everybody's kind of comfortable with. And it's like a lot of people, like the ETH community kind of knows each other a little bit. It's like, I know there's kind of a multi-sig with upgradability, but I kind of trust those guys. In the Bitcoin community, by default, no one trusts each other, So it's like LPs don't trust me. I don't want to trust the LPs. And so I actually think that there's a much greater thesis for true non-custodial tech within the Bitcoin community, in a sense that right now, the honest truth behind most Bitcoin LSTs or most infrastructure built on Bitcoin is that you're kind of just trusting this core team a little bit, right? Like in the Bitcoin LST space, for example, I think maybe all but Lombard are just built upon centralized custodians. And what that means is there's like some team who's got a couple signers in the background, in this case, probably like 3 who are clicking buttons. I mean, this isn't operational robustness. That's a little bit scary, So Lombard's goal from the beginning is like, we don't want to be building that kind of thing. Like that, how much pressure that is on a team to be able to like operate efficiently. But 2, it's like users are going to demand true decentralization. I know, like, if you can't build non-custodial tech on a long enough time frame, it's not going to work out. Maybe the sort of team multi-sig or like utilizing a centralized custodian works for $100 or $200 million or something like that, some smaller amount, even though that's still a large amount. It's not going to work for 10 billion, And so that's like where it's been at from day one. The only way right now to secure 10 billion, $100 billion is to create a sort of consortium who can collectively secure the assets. This is why we're building this sort of Cosmos SDK chain. We're calling it Lombard Ledger. We haven't officially announced it here, but there's a little alpha leak. And the idea here is basically like, you can already think of Lombard as this mini blockchain where there's this group of participants who has certain things they can and cannot do, but their core function is that they notarize deposits. Hey, that Bitcoin has been received by the Lombard protocol, and they enable minting. So once that Bitcoin's been received, then I can allow for minting on another chain. So it's like Lombard is this bridge. And so, the way we're thinking about this is like, we're going to have some of the biggest mining pools in the world, some of the biggest exchanges, some of the biggest DeFi protocols, all sort of operating nodes in this consortium. You can think of the LBTC as this universal Bitcoin primitive where Lombard is sort of collectively, we're sort of unifying the ecosystem around one primitive that everybody's sort of working together to secure. That's the vision for this consortium. So you're kind of right in that Lombard is both a liquidity primitive in LBTC, this token that floats around within ecosystems, and a security primitive, which is the sort of ledger that secures it. Right now, we're just keeping it, we're sort of narrowly focused on building it as a primitive for Lombard's LBTC, but who knows? It's possible we could open it up in the future.
Why'd you guys choose a BFT chain? Is it because of finality?
So we needed BFT. So we actually initially launched with Raft Consensus, a sort of permissioned form of consensus, which made sense because it was a permission validator set anyway. However, even in the case of a permission validator set, there's benefits to having the robustness of like BFT. So in this case, nodes can go on and offline without having to restart the network and whatnot. So it's, we needed to move that direction just for operational robustness. But we also, probably still the easiest way to build a blockchain right now is with Cosmos SDK, I think. And then in order to utilize Babylon's security, so Lombard will become one of the first chains secured by Babylon, you need to be IBC compatible. Or there's actually a couple different ways they're building it, but I think this is the primary way this works out. And maybe the last thing is that it ends up just being like a great piece of infrastructure for everything we're trying to do. Lombard is kind of this L2, this bridge that allows people to connect from one ecosystem that traditionally has been walled off to the rest of the world in crypto. So there's a lot of stuff. I mean, you hinted at it a little bit, but there's a lot of things I think we could do with this kind of base layer.
And so I guess for somebody who's just finally coming around after listening to you speak, they're like, fine, I'll not let go of my Bitcoin, but I'll deploy it. I'll put it to work. How can they be assured of the security of the protocol that's securing their Bitcoin for them? And what does the process look like when they've gone out, they've created LBTC, they've deployed it to DeFi protocols, it's been a year or two, and they're like, okay, I just want to self-custody, cold storage, my Bitcoin again. What's the process like for them to redeem the LBTC and then get the Bitcoin back into their wallet?
Yeah, good questions. So the goal for Lombard in building a non-custodial liquid staking protocol is to think of this exactly the same way people would think about like the Uniswap v3 or Aave smart contracts. It's like can't be evil. That's the design spectrum we're going for. And so, the way we've kind of structured this to begin is 2 layers, a consortium of trusted parties. So this is like a permission validator set. We're basically trying to structure this with the biggest institutions in crypto, such that it's like, you do have to rely on this honest majority assumption, but it's like, man, if, I don't know, 11 out of these 21 validators rug, then crypto's going to have much bigger problems kind of thing. So that's sort of the design there. And then we also have this sort of base layer that's built upon Cubis, which is a key management system, which has very robust, you can almost think of this as like an off-chain smart contract. This has very robust policies and guarantees, giving different participants within the system a very narrow set of actions that they can take. So in this case, it's like, even if the consortium wanted to rug all of the assets, they couldn't do it, And if Lombard wanted to do something or another party within the system needed to do it, there's like certain checks and balances to avoid any single actor, from doing something. Certainly we have room to grow on this. I think, and this is part of the reason we're upgrading to the Lombard ledger, and we'll continue to sort of decentralize the system over time. I can at least say that this is leaps and bounds better than what the market standard is today. And I hope that, Lombard continues to kind of push this further over time. And I think we're always open to feedback. It's one of those things where it is a balancing act between getting to market quickly and shipping a product that's usable and, creating something that can last 100 years. So I think the vision for us, the sort of ideals which Lombard is founded upon, is always about building that hyperstructure, something that's going to last, forever. But in the meantime, I think there's a lot we have to build too. What I will say is that, like, co-founder at Lombard of mine is one of the leading researchers on BitVM. So if there's anybody who's closer to real, like, truly non-custodial tech being built on Bitcoin, it's him. And long story short, I think we're not quite ready for it. So when that's ready, you can bet Lombard will be a big player.
So, and I don't mean to be adversarial or get you in a gotcha moment, but
yeah.
The thing with Ethereum is when you create a smart contract, it lives forever on chain.
Yep.
And so based off of everything you were just saying, you're building to this place where Lombard's protocols and tools will be able to survive without like a Lombard leadership. But like, are you guys there yet? Is there kind of like we need to get to this point for the things that we're building to be able to live in perpetuity? Do you kind of have that like end goal in mind, a time frame, or are you still just kind of like building all the building blocks?
Yeah, definitely. No, it's a good and fair question. Lombard's not there yet, but we're getting there. I think we're doing about the best we can in short of expressivity at Bitcoin, right? So my real belief is that within the next 2 to 3 years, or let's say within the next 5 years, just to be safe, Bitcoin is going to either BitVM is going to have matured to a state where it actually becomes useful. BitVM being this sort of like optimistic verification of a Stark directly on a Bitcoin L1, which basically lets you create a non-custodial L2. So you can think of this on par with like the security of Arbitrum or Base or something like that. If you could do that, Lombard will be that. Yeah, so I think we're waiting for that tech to mature. Another route is this sort of OpCat movement, which would allow you to do similar things. So I think within the next 5 years, almost certainly, there's going to be a way for us to do away with this sort of tech that we've built. Basically, what I sort of think is that we're building this bridge. In the meantime, if we want Lombard to scale to 10 or $100 billion, how can I ensure that I at least have security for the next 5 years or something like that? Is this going to be nation state tamper-proof? Not quite, right? But I think we'll get to the point where, other tech will mature and allow us to upgrade the system.
Yeah, you bring up a great point, and it's kind of fascinating that as a Bitcoin builder, you have to be able to implement either a BitVM solution or an OpCat solution.
Yeah.
So are you guys just kind of nimble and willing to move in whatever the direction that ends up becoming the thing is?
Yeah, absolutely. I mean, I think our goal is to just, have our head as deep into the research as we can to make sure we see what's coming. And I think Lombard's in a privileged position right now in that we have had a lot of early traction. I think, it's easy to get really excited about new ideas and opportunities when your traction too is early. Like when we were, I don't know, when we had a couple $1 million in TVL, I think we were all thinking like, man, should we start building BitDM now? Should we kind of do something? When you have $1 billion in TVL, it's a little bit scarier to kind of be that guinea pig in a lot of ways. So I think we're just waiting to see, what kind of works out. What I can at least say is that Lombard users would prefer a trustless, fully non-custodial protocol, even like a consortium. They would prefer to not have to trust that if something was available. But I can at least tell you that it's not the tech's not mature enough yet for us to be able to build on that reliably.
Totally. And if we're kind of zooming out, we're getting to the top of our hour, but you guys have been able to accumulate approximately 17,000 users. We're recording at the end of November 2024 and almost 11,000 LBTC minted. So how have you guys gone about finding these users? How have you guys built a network of trusted people who trust you guys and want to participate in what Lombard's offering?
Yeah, it's a great question. So it started with building in the right market. People were excited about putting their Bitcoin to work. People were excited about staking into Babylon. So I think we caught that wave initially. And I think, like I've said before, liquid staking is just a great product. It's fundamentally better form of staking. It enables, we partnered with a lot of great DeFi protocols to sort of offer up these yield opportunities in addition to what is already a great opportunity. Staking to Babylon, great. Staking into Babylon and staking into Pendle, Morpho, Gearbox, all of these awesome DeFi protocols, even better. And, I think we benefited from a lot of user education that the Eigenlayer ecosystem did, where to the point where, users were pretty familiar with the flow. Granted, it was a different asset that I think they had to get comfortable around. But once they sort of picked up how Babylon worked and kind of Lombard's positioning, it was a super, super simple pitch, So, I mean, I think that was kind of the story of it. I'd say our user base is a mix of, call it like retail, or Fold had this concept of pro-tail, kind of sophisticated whales effectively who are not like running an institutional fund. It's a mix of like large institutions, crypto native venture funds, and liquid funds. I would say, when we first went out to market, I think we were originally talking to a lot of like Bitcoin maxis, really big miners, Bitcoin whales. To be honest, the people who have moved the fastest for us and got the most involved in our ecosystem in ways that is valuable to the long-term health of Lombard has actually been what I would describe as like ecosystem players who also just happen to hold a big stack of Bitcoin. This goes back to our original conversation. Like at the end of the day, we're all Bitcoin guys. We might play in other ecosystems, but everybody's kind of on board with the thesis of Bitcoin. In a lot of ways, I almost feel like, Lombard sometimes stays a little bit, when we were originally going out, we were focusing a little bit too much on the Bitcoin community, and really we should have just been focusing on the DeFi community and, the crypto community broadly. And so I think we've had a lot of movement from those types of folks. And so it's like, it's a little bit of this game of where you're trying to map out the whole Bitcoin ecosystem of like, okay, here are the Bitcoin maxis, here are the ETH maxis who hold Bitcoin. What's the lowest hanging fruit to onboard some people, start to build some trust in this primitive, and then these conversations will evolve over time. And I think that's exactly how it's been. Babylon Cap 1, we heard no from a lot of people who then deposited into Lombard for Babylon Cap 2. So the name of the game is kind of survive and advance a little bit, continue to grow the protocol and build trust over time. And it's not going to happen on we've only been around for like 6 months, so it's been a pretty crazy time. But there's a lot of people I think we're talking to now that we probably won't be able to close for another 12 months or so. And that's perfectly fine.
Cool. So my kind of final question is going to circle back to something we spoke about earlier. And maybe you can just give a sense of the insights that you've been able to garner from the conversations you've had with partners and maybe with other folks at the VC or even institutional level.
Yeah.
When we talk about Bitcoin yield, there's the very Saylor-esque lending to a bank kind of perspective. And so I'm just curious, on your website, it says you're collaborating with Franklin Templeton. They're one of the largest global leaders in asset management with approximately $1.5 trillion of assets under management. So maybe without going into super, minutia of detail, can you just share your perspective on what have your relationships and what have your conversations been with these types of large scale asset management entities, are they starting to grasp what Lombard is offering and what non-custodial liquid staking solutions might offer? Or are the conversations still kind of early days and you're still talking about providing custodial solutions just for them?
Yeah, exactly. Franklin Templeton, one of our earliest investors, the guys over there are great. Institutions like Franklin Templeton, Van Eck, the BlackRocks, they get it now. I don't have to tell them, I don't have to like give them the pitch on crypto and then like smart contract platforms and then liquid staking. Like they get the flow of things at this point, which is part of the reason they've been successful investors and even successful builders. Right now, you have a lot of real world assets from all those entities being issued on chain. So it's only a matter of time for us before they get comfortable deploying big money. I mean, part of the reason that guys like Franklin Templeton and some of those other funds groups I just mentioned were some of the first people we called was because, I mean, those are some of the biggest crypto holders and asset managers in the world. The name of the game is how do I get those on board? I think sometimes DeFi gets a little bit caught up. Well, it's a mix of things. Sometimes DeFi gets a little bit caught up in the retail game of like what's going to happen in the next 3 to 6 months. For good reason. There's truth in you've got to stay alive. You got to kind of keep building momentum. But longer term, the name of the game is how do you onboard the biggest players in the space? And we've been focused on building that kind of infrastructure, or at least beginning to build the company with the principles that would ultimately be able to onboard those types of groups. So, with those guys, it's those are probably more in the groups I was discussing who may take a little bit longer to be able to get fully onboarded to Lombard. But it's I will say I've been pleasantly surprised at how much institutions of crypto are willing to dip their feet in. It's not like, obviously I'd love it if some of these big Bitcoin ETF providers would start staking their Bitcoin through Lombard. I know that's not going to happen just yet, but at least taking the first step just to like put some, get some skin in the game, start to understand how the protocol works. I think this has been huge. And maybe, this to me was one of the defining parts of Babel, like the early Babylon days before they launched. It was so obvious, I think, that they were going to be a massive player because you had every big mining pool running a proof of stake validator on the testnet. You had I think 3 of the biggest Bitcoin asset managers in the world running nodes on testnet. So it was like the Bitcoin community, the big Bitcoin holders had already kind of said, we're interested in this thing. Let's see what happens. Franklin Templeton, a major investor in, a lot of the Bitcoin, they've been a huge investor in the Bitcoin DeFi ecosystem and a supporter of everything that we've been doing that, BitLayer's been doing on that hat that you have. It's only a matter of time before these guys keep moving. And like we were talking about a little bit back, it's funny, in the first cycle you're in, there are things that are hard to imagine that always happen in the next cycle, so it might be like late this cycle or late next cycle that we start to see, crazy institutional adoption, but without a doubt, it's coming.
You mentioned the big guys getting into staking, and I think we still need to see a little bit of regulatory and maybe even some legislative clarity on that. But
very true.
Here's to hoping for some positive results here in the U.S. in the coming 2 to 4 years.
Yeah,
we won't speculate on that though. So Jacob, if anyone who is listening to this is really psyched, who do you want to speak with, and what's the best way they can reach out to you?
Yeah, I'm interested to speak to a little bit of everybody. Bitcoin holders, active DeFi users, anybody building a DeFi protocol. I'm always pretty open. I feel like I learned a lot in this space by just pinging random people and hopping on conversations with people I probably didn't have business talking to. So I'm always up to chat with people. So you can find me on Twitter or I don't know, DM me on Telegram or LinkedIn or whatever floats your boat. I'm pretty active wherever.
Fantastic. Well, Jacob, thank you so much for your time today. It was fantastic to talk about Lombard, about the amazing things that you guys are doing with non-custodial liquid staking solutions.
Yep.
I really can't wait to keep my ears to the ground and keep following what you guys are doing. So keep up the good work.
Awesome. Well, thanks a ton, Dylan. I appreciate it.
Cheers. Thank you for tuning in to the Smart Economy podcast. To stay in the loop with all our latest episodes and insights, head over to www.smarteconomypodcast.com. And don't forget to subscribe on our YouTube channel for all of our video content. If you enjoyed today's discussion, please consider showing your support by liking, commenting, and reviewing this episode on your favorite podcasting platform. Your feedback really helps us reach more listeners and brings you even better content your way. We'd also love to hear from you, so please drop a comment on Spotify or on YouTube to share what topics you'd like us to cover next or who you'd like to see as an upcoming guest. And if you or someone you know would make a great guest, please don't hesitate to reach out. We're always looking for fresh voices and new perspectives. And for NEO token holders, please consider voting for NEO News Today as your council representative. We've proudly been supporting the NEO ecosystem since 2017, and will continue to do so by putting portions of our council rewards directly back into ecosystem growth initiatives. So thank you so much again for listening to the Smart Economy podcast, and we cannot wait to catch up with you next time.